Hello, everybody. Brian here. Let's get over to the other screen here. I want to talk about the US dollar. As you can see here, the US dollar has gone up between May 21st to October 22nd. If you just invested in the US dollar during this time when everyone else was losing money, you'd be doing okay. But since then, we're talking December 2022 to now, we are pretty well in a flat sideways move with the US dollar. Personally, the reason for that is due to inflation. Not inflation, but what the Federal Reserve is doing by printing money. If you have not seen the headline under Biden, he wants, I believe it was a $7 trillion budget for the next year, next short term. It's completely bonkers. The national debt was up to 2 trillion up to 2008 or in around there, 2005, and then now you're at 34 trillion, and they want to just add on another 7 trillion. I'm sorry, but the 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 insane asylum is being run by the patients, not by the doctors. So that's what's going on with the U.S. dollar. So right now, you can see some kind of credibility here, and it's gone fairly volatile over the last few years. So I want to talk about an article I came across on Bloomberg or BNN Bloomberg, but it's really Bloomberg. U.S. dollar bets at risk as central banks sink on rate cuts. Now, everyone's seeming to think that there's going to be rate cuts. And then, first of all, it talks about employment. Employment is not the real numbers you hear because they readjust the numbers a few months later, back down to something more realistic. Personally, I think the numbers for employment are not real because we have an election year coming up. So they're trying to make the current U.S. presidential administration looking good. So they're somewhat manipulating the data. The media, especially like Bloomberg and CNBC, is in on it to publish that. But when it comes to the corrections, those don't get the headlines either. So that's one thing to hold back on. And when it comes to all the other banks, with the Bank of Japan trying to raise rates now, with the yen basically getting out of control for the last number of years. So that trade appears to coming down to the wire. So what I refer to is this one right here, which is the USD Japanese yen. That seems to be coming to an end, okay? Because you can see here the yen on. Let me just pull up a daily view here. So let me just see. So we have here the USD CHF and the Euro USD. So up until a point, the U.S. Japanese trade has always been fairly good. So they intervened right here, and then it just continued to move up. So they're trying to slow down this deceleration of the yen because what happens is it becomes more expensive for Japan to import product into Japan, and it becomes more expensive for the citizens. So they pay the price for that. Also, when you look at the USD Swiss franc, that has been fairly weak for the last little while. But it's these type of trades. If this does continue to move up for, let me pull up maybe a daily view, or I'm sorry, a 4-hour view might help. You can see here the USD Japanese yen's kind of gone flat. So if I bring up I did have that daily view here, but you can see it's gone really choppy. It used to be a nice, steady trade over the years. Like look at how it's moved up in 2022. This is the USD Japanese yen. So going back to here with the DXY, there's some questions to come into this. Now, when you factor in, and I'm going to use CFDs, the poor man's way to look at the price of oil. Oil has gone up quite a bit, and a lot of it has to do with the Russians. The Ukrainians are blowing up a lot of the U.S. refiners via the drones. So you can see here, oil's gone up from 82 to 85. Now, it also doesn't help when you have oil tankers going through the Red Sea being attacked as well by the Houthis. So that's going to drive up inflation. So will that have an impact on oil? It depends, because U.S. production oil is obviously U.S. production. And what I just read today is that India is starting to import U.S. oil instead of relying on Russian oil because it's getting more expensive. So if you do a comparison between, a lot of people don't know the difference between WTI, Western Texas crude, versus Brent crude. And from what I was told in the early days, West Texas oil is generally West Texas, so it's U.S. produced, and Brent crude is international produced. So if I'm wrong, let me know. But here you can see that there is a relationship, a very very tight relationship, but it started to diverge here between the two, between the BCO and the WTI. So the WTI has still gone up with the Brent crude, while the WTI is a little cheaper by a little bit, a couple of percent, or not even a couple of percent. But the Indians are now importing U.S. oil. I don't know if that's political, but the Indians right now are the ones that drive the price of oil. And then you look at the economy of China, which is starting to come back. So they will import Russian oil. So what the Chinese do, importing maybe from Iran, that's a possibility. So how does that impact the dollar? Well, the dollar is related around inflation. So if you start to see the price of Brent crude oil going up, that is inflation going up. So when you look at food things like soya bean, as an example, let me just see here. So just as a food production product like soybean, we also have other things like so soy doesn't have it at all. Okay, so it doesn't have it. So let's look at sugar as a potential food product. So you can see here, sugar has come down as a cash contract. So if I look at the daily, probably the weekly may be better. You can see here, sugar has come down. So that's as of right at Christmas 2023, and has been kind of starting to eke up. Another one that would be an important one to watch is copper. The price of copper is another big one you need to follow. So let's say we look at a future contract of copper futures. You can see here copper has not come down in price. The only reason it's staying flat is because of China. I've shown a relationship between China when it comes to Australia. Australia producing the copper that China imports, along with the Australian dollar. So this has been in place for a while, but you can see here from 2022, its decline moved up and started to move up as well. So U.S. has its own small copper supply, but this right here should go down. But what will tend to happen here is, let me just check on the chat. Okay, so what tends to happen is as the economy starts to pick up. Now let me overlay copper and China 50 as a comparison, just to see that hopeful relationship that you'll see. So you're looking at China 50 CFD. You can somewhat see China has gone into a decline. Copper is starting to diverge. China is still in a decline, but you can see right here it's starting to pick up. So it's happening to the price. It starts to pick up. Same right here. China started to pick up. The China 50 copper price starts to move up. So each time that the Chinese economy or market start to pick up, you can see here copper does not descend in price, decline in price. So we're going through this again. So what's happening along this bottoming process? China's getting stronger. And when China gets stronger, their economy gets stronger. So the two big products they'll be importing that you can watch is copper for manufacturing as the economy gets better, and oil as it gets better. So even though copper is a universal metal, it's going to affect the U.S. economy. So the same thing can be said for the U.S. economy, where more importantly for inflation is going to be measured by manufacturing. So you got your four base metals, you got your oil, and you can see already that the prices of both oil and copper have not declined. So as the economy starts to pick up, and it will, I really think we will start to see this, um, the China uh, economy start to really pick up, as you can see here. And I think that they'll start to go, start to get stronger. So more manufacturing. So that's going to impact everywhere globally. So this is why I think you're starting to see the dollar stay in a sideways mode because it's waiting for some form of catalyst to drive it down or up. Now they can manipulate as much as they want. The Fed, they can, whoever in the U.S. government can manipulate what they want, how they want. But because China is a much bigger economy than U.S. Okay, as well as Brent crude as well. The other one you got remember that's starting to come online now is also India. So between India and China, as their economies pick up, the inflation will go up for both major products like oil and metal, and that will mean copper will go up as well. Now, you might think, okay, so will that impact the U.S.? Yeah, it will because it will impact the dollar, and the dollar will become less relevant as the BRICS uh, treaty plan, whatever between Brazil, Russia, India, and China come into play over time. So their market, uh, the amount of dollars traded globally versus let's say digital or the yuan, that is declining for the U.S. and their credibility is also declining as well because you're adding on national debt. So the credibility and the credit agencies will start to cut the credit uh, also of the U.S. So that will mean, just from a foreign investor point of view, fewer people will want to hold the U.S. dollar because the credibility of the U.S. government is going to drop. It's already not a triple A, it's a double A, so it's already impacted there. So people don't talk about this, but this is a much higher picture on what is going on right now and the direction it's going. So how I predict it, I do think that the dollar over the long run will decline um, because of this, because of inflation, which will put the Fed in a very bad situation. Where I remember that they said back in November when things were hot for the U.S. economy and the market, that they would start to cut this year, 2024, seven times. They haven't cut yet, and it's already March. So with these things that they're watching, they cannot influence this, right? They don't have control of the pricing of global oil, and they don't have the control and way to influence copper prices along with food. So this is where you got to watch. It's just a matter of time before you start to see some form of catalyst. So when you look at the gold holdings, so let's say we look at gold, and I've shown this before, right? So if you look at gold versus uh, gold versus a fiat currency like US dollar or any major Western currency, you can see gold is what's the hold right now. And this is because why gold is rising, as you see, is because of right there in orange. This is going up because of the concerns, the credibility that global investors have for the U.S. So they are not too confident with what's going on in the U.S. market right now. It is flat, but because of the national debt, the quality of the dollar, the credibility of the U.S. government, it's starting to be questioned over the long run. And that's why gold, silver's moving up, and this is becoming the new replacement for the fiat currency. And yeah, a lot of people will talk about Bitcoin. I'm not against Bitcoin, but when you see the crazy volatile moves that we've seen over the last number of years, or sorry, last couple of weeks, it's very hard to stomach that volatility. I mean, if you're in your 20s and 30s, sure, you can stomach it. But a lot of people in their 40s and up may look at Bitcoin as it's too, yeah, it does outperform, but it also, when it draws down deep and long. So a lot of people may not want to hold that. So we're beyond speculative pricing of Bitcoin. I think with Bitcoin, we're now entering the utility of Bitcoin. And we haven't also factored in that BlackRock is in the space now with their ETFs, and they can control the price of Bitcoin, believe it or not, because they're a $10 trillion, um, uh, a $10 trillion market cap, market value of what they hold under assets under management. So yeah, they can easily influence Bitcoin if they want. So these are concerns to have for the U.S. dollar as these products start to go up. Oil and copper impacts dollar, and over time, the only way to fight that inflation is by raising interest rates. So I think that will have a huge impact. We saw what's already happened with the interest rates that get risen. You start to see banks the weaker banks start to collapse. Um, the economy slows down. Everybody gets desperate, and the Fed will maybe want to try to throw money at the problem by printing more cash, but it's just getting weaker and weaker every time they do it. Less impact. So it's a very desperate situation that they will be in the next few years, the way the headlines are showing it. And short term, they may be able to fix it after the election with a new president, if that's the case. But long term, that problem's not going away. So the only way to fight it is through austerity. And with these modern money theorists, that ain't going to happen because they're pretty well running the show. So that's pretty well it over the long run. And just wanted to give you my thoughts on it. Other than that, thanks for watching.